Places where other comprehensive income has been used in various Ind AS. First one, Ind AS 19 employee benefits. In case of actuarial gain or loss on subsequent remeasurement of a defined benefit obligation or plan assets, that actuarial gain or loss will be transferred to OCI, which will not be classified to reclassified to PNL. So OCI NR, OCI non-reclassified to PNL. Next, in case of Ind AS 16, PPE, property, plant and equipment, and Ind AS 38, intangible assets, revaluation gain on upward revaluation will be transferred to OCI NR, OCI non-reclassified to PNL. Next, on sale of PPE or intangible assets, the gain will be transferred to OCI, which will in turn transfer to retained earnings, that is other equity. So in Ind AS 16 and Ind AS 38, OCI is used two times. First, in case of revaluation gain on upward revaluation. Second, profit on sale of PPE or intangible assets. Next, Ind AS 21, effects of changes in foreign exchange rates. In case of translation of financial statements from functional currency to presentation currency, including translation of items of foreign operations, exchange difference on such translation will be transferred to OCI R. R means reclassified to PNL. When reclassification will be done? When foreign operation is disposed of, then reclassified to PNL. Next, Ind AS 12, income taxes. For any item which is recognized through OCI, DTA and DTL, deferred tax asset and deferred tax liability pertaining to such item shall also be recognized through OCI. So, if any item is recognized through OCI, then DTA, DTL pertaining to that item will also be routed through OCI only. Next, Ind AS 28, investment in associates or joint ventures. Share in OCI of investee company will be recognized to OCI of a parent company while following equity method. So investee company's OCI will be recognized in parent company's OCI when equity method is followed. Ind AS 36, impairment of assets. If any PPE or intangible assets which was earlier revalued upward is tested for impairment, impairment loss, if any, shall be first recognized to OCI. Next, Ind AS 103, business combination. Gain from bargain purchase will be recognized in OCI. Next, Ind AS 109, financial instruments. In case of business model, hold or trade plus contractual cash flow characteristic test met, then on disposal, it will be measured at fair value through OCI or reclassified to PNL. Investment in equity shares, which are not held for sale and has a recoverable option to use, will be valued at a fair value through OCI, NR, non-reclassified to PNL. Equity component of a compound financial instrument will be classified under other equity separately. Cash flow hedge. In case of subsequent remeasurement of a hedged item or hedging instrument, difference will be recognized through OCI in the form of cash flow hedge reserve. Cash flow hedge reserve shall be amortized to PNL over contract period. Next, hedge of net investment in foreign operations. Any gain or loss on hedging instrument that is determined to be effective hedge is recognized in other comprehensive income in the form of FCTR, foreign currency translation reserve. It will be reclassified to PNL on disposal of foreign operations. Ind AS 8 and Ind AS 101. In case of third balance sheet, that is opening Ind AS balance sheet, retrospective effect in asset or liability difference should be given in opening retained earnings, which will affect other comprehensive income.